Today's topic is how to be profitable because I'm starting to see a lot of bad habits that I know are gonna fuck you, and they may not fuck you today, but it's kind of like when you stick your dick in crazy, okay? Today it feels real good, but
that's what we're leading with. That's what we're leading with. Is when you stick it in crazy. Okay.
So today we're talking about how to be profitable. What are those elements? What will keep you out of trouble? What will keep you making those gains? Okay, so let's talk about a couple elements. What we're going to talk about today is risk to reward. So all that is just how much money you put on the table, right? It's maybe you put down $10, maybe you put down something else, but what reward do you get? Because we're all here for the reward, right? Maybe you get $20 out of that. I don't know. Second thing is win rate and how those two combine for you to be profitable, okay? Second thing is we're going to talk about is portfolio positioning, because you don't have just one trade out there, but how you manage, and the internet's way of talking about this, it's called your bankroll. And third, hedging. And why do we need hedging? Because you may diversify your portfolio and you get a lot of different positions. But if all those positions are actually related, what'll happen is the overall market, or whatever the overall market does, will fuck your whole account. Things that will happen with that: hedging and systemic risk. We're gonna cover a lot, but you guys are gonna understand. I think we're gonna be better off because of this. Okay, specifically, we've been in an elevated environment. When the VIX is above 20, right, there are certain rules that happen. It's a completely different market. I see a guy day trading on Twitch and he showed his profit loss stats. He only had a little better than 40% win rate, but he made 400,000 last year. Yep, because it's not about your win rate, it's how right you are. Let's start with the first one. We're gonna build on this, okay? So, what is risk and what is reward? I think you guys got this one down. So risk is how much you lose, right? Let's imagine that you're at a poker table and you put down a bet of $10. We're gonna do a nice little even amount so I can do the math. Your reward could be double that, which would be $20, let's say. Whether you're wrong or right, both are rates, right? They're percentages. So you guys know if you flip a coin, you're 50-50, right? So your win rate is 50%, but your loss rate is 1 minus that, because they're both related, right? So it's really easy to calculate that. You just do 1 minus that, and then that would be 50%. So how do you become profitable over time, right? Because you're going to continue to sit at that table because all that free bourbon, is tasty, and you want to sit at that table and have fun, right? Okay, so how do you know over time if you're going to be profitable, right? Well, you gather these numbers from doing, like we talked about with Kimmy, by doing 30 trades or more. And this is making a big assumption, and I'm just gonna disclaimer it, but for now, just accept it, or else we have to talk about stats, and I don't know. We just need to make it a small conversation, but you're making the assumption that your trades are normally distributed. And most of the time they are. It's not a terrible assumption, but sometimes things can go awry. And what you'll notice is this kind of concept is in the trade journal that I put in the resources, so that way you can take your trades and put them in there, right? And kind of follow the same thing. I'd say this might be a biased sample though. If your strategy is in a bull market, if the conditions change to say what the fuck market, then the strategy wouldn't longer work. Absolutely, Root. And that's part of systemic risk. And that's why I was talking about the VIX being above 20. This is a very weird market because the VIX doesn't stay above 20 for long. Now we're going to say, how do you tell without betting over and over if this system is going to work, right? Sometimes you have to collect that data by trading your process. But other times we know what that process already looks like before you're gonna do it. So how do you tell, right? With a 50% win rate and a 2-to-1, do you know that you're gonna that you're gonna make money or not? There's a formula for it, but who wants to guess if with this risk to reward and this win rate that we've told you, what do you guys think? Okay, so now we're gonna calculate it. Okay, so it's called the expected value equation, but just think of it like how much is each trade worth? So what you're gonna do is you're gonna take the risk rate and pair it with the loss rate. Let's put the formula. So loss rate times the risk plus the win rate times the win amount, which is reward. Okay, and then just like you did back in the day, let's just fill it in. So we're gonna put 0.5. The loss rate is 50% times the risk, which is $10, plus the win rate, which is $20, or the win rate, which is 50% times the reward, which is $20. Okay, so let's do the math. So that's 5, because that's half. 5 plus 10. Oh, I almost forgot the negative. The negative has to go here. So the loss rate is actually a negative because you did 1 minus the win rate. So I forgot about that. Whoopsies. So I put negatives all down here. So we have $10. So the expected value is $5. So any expected value that's over 0 means that you will make money over time. So it's just that simple to understand if over time you make money. And so when you hear all these conversations about people talking about that they were right, okay, well, how right are you? And then people are like, well, I'm wrong all the time, but I still make money. Well, now you know that their risk to reward rate is they probably make a lot when they do win, you know, and you can have those kinds of conversations and be more educated about it, right? And you can be resistant to the bullshit. The whole point of having this conversation is you can be resistant to the absolute bullshit that people have around investing.